Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, April 2nd, 2018. In this video, I'd like to take a look at the automakers. Couple of reasons for that. Number one, first and foremost, there are some potential trading opportunities setting up, and as well as some that have already played out recently. I'll get to that in a second. Also, these are, auto sales can also be used as an economic indicator. I'll get to that in a second, looking at these charts. They're often, a drop in auto sales is often a precursor, can give you an early heads up of a recession. And finally, if you are considered buying a new car, or maybe selling your existing car, if you keep an eye on the trend of the automakers and the industry as a whole, we've come off it, we're at still not coming off it yet. We're still towards the high end of the range of record high auto sales, and everything is cyclical in the economy. And so, therefore, once we start seeing auto sales really drop off, and that has been the trend recently, and that's why I'm doing this video, if that continues, you'll see a glut of cars out there. We know that there's a glut of new cars on the market. In other words, cars that have been sold over the last several years with new car sales at multi-year highs. What that does is it puts pressure on the used car market. You have a lot of new cars, relatively new cars on the road. They're building cars a lot better than they used to. So therefore, that reduces demand down the road. So those are the takeaways there. But let's dive into here, trading ops and what I'm looking at here. Before I get into I don't want to get off topic here, but I do want to make mention. This is what prompted me to do the video. I like to look at the economic calendar, especially starting out to the trading week, and see what's going on. And today we have three potential market moving events: PMI, manufacturing index, ISM manufacturing index, and and construction spending, all coming out at 9:45 and 10 o'clock. So the point being, like I said, let's see what happens this week. Friday was, for me, was a day trading day. Had a great day trading the NQE minis, both long and short. Mostly long on Friday, a couple short pullbacks. And now today, I would have no desire to get in front of anything until these reports come out. Because if you're in a position, especially day trading, when these numbers are released, especially around 10 o'clock, you can't beat the machines. High frequency trading, whether they like or don't like these numbers, you're probably going to see a quick spike up or down. So to me, it's a crapshoot. Let the dust settle after that, and then I'll do an update on the markets, and we'll kind of see which levels are holding and what to look for, what to watch for this week in the broad markets. But here's what I wanted to focus on today: motor vehicle sales coming out tomorrow morning. Here's the what we're looking at here. The story is this. Uh, Lately, in the recent trend, vehicle sales have been very soft in recent months, and more of the same is expected for March. So we're looking at here's the March total vehicle sales to be reported tomorrow. Last month we had 17 million. We're looking at consensus right around there again, another relatively soft number, 17 million. Domestic vehicle sales, the consensus is to be a little bit lower. When you look at the trend down here, the gray bars are the total domestic motor vehicle sales, and the blue line is percent trucks. This has been good. This blue line has been a net positive for the automakers because trucks tend to have higher profit margins than cars, and that's been so. There's been an increase in truck sales versus auto car sales. But the bigger picture, if you look at the latest trend, if you look at these gray bars, you can see clearly they're trending lower. Now, this may just be a blip like it was back here. We had auto sales trending lower and then a big pickup here back around the fall of 2017. Everything's cyclical, so we'll keep an eye on this. But this is the bigger picture over here. In fact, let me jump back to this is really a follow-up to this post here. Automakers setting up for a swing trade. It was posted back on January 18th. And so what we're comparing side by side, this is a chart that I got pulled off macrotrends.net, and then I added my own annotations. I added the yellow highlighted area and the red bars. And what stood out to me is, barring these brief spikes, which are aberrations, you want to exclude that when charting. When you see these very brief outliers like this, exclude that. So pretty much what I see is that in recent years, really going back to the 80s, or late 70s, in fact, this was the late 70s right here. That area acted as a ceiling for auto sales, and then you can see these shaded lines here, here, all the way here. These mark recessions. This was the Great Recession right here. 2000, the market dropped from October 2007 into March 2009. Um, and again, the takeaway from this is, there's trading ops to be made in these automakers, both long and short. So far, they appear to me that they're quite likely in the early stages of a new bear market, and we've certainly had a pretty healthy correction off the highs in most of these automakers already. And I think the next move, and this is what I'm doing the video for, will be setting up for maybe a long side trading up. Bear market rallies, or even if it's just a correction that we just had and they're off to the races for new highs. Either way, doesn't matter to me. I'll trade it long. You can put whatever label you want on it. Bear market rally, bull market rally. If the technicals confirm and there's a trade there, just like there was a few months ago, I'll take it, whether it's long or short. The other thing is, again, economic indicators. Keeping an eye on both the auto sales, total auto sales, this is auto and light truck sales, as well as the charts of the individual manufacturers, auto manufacturers, that can give us a heads up. Because as you see here, um, auto sales usually drop off in advance. You see a sharp drop off in advance of a recession, like we did here, like we did back here. You can see the recessions come later. So if you're sitting around waiting for the government to tell you that we are in a recession, I have some news for you. The stock market's going to be down 30% or more. Auto sales will be down. Um, Recessions are only identified in hindsight using past economic data. GDP is always usually revised well after the fact, and that's what they're looking at for recessions, GDP. So I just wanted to point that out. So I'm using this again, both trading ops and an economic indicator to kind of give us a heads up on where the economy might be heading. Because if we continue to see total auto sales fall, that could possibly tell us what's going to happen here in the economy. Maybe the economy holds up. Maybe this economy has some more life left in it. This great bull market, another year or two, and that's possible. So we'll watch this. And then finally, if you're planning to buy a new car in the coming years or sell your existing car, this could come into play too. Because when auto sales start dropping off, if there is a recession, we know there's already a glut of cars on the market. Auto sales have been at multi-year highs for a while. They've been at the high end of the range. What that means is there are a ton of new vehicles out on the market. A lot of cars have been sold in recent years, and as most of us know, the cars built today last a lot longer than the cars of yesteryear. They're a lot more reliable. They're on the road longer. And so what's going to happen is, there's already becoming a glut of cars on the road. So that's going to affect both the used car market and the new car market. You might be, if you can hold off a little longer, you might be looking at a really good deal on a, new car down the road, or a used car for that fact. Okay, so since that post back on January 18th, then with this chart, I updated the chart today, and you can see there has been, there was that drop off, but we're still up within the high end of the range. So you can't quite yet write off the auto industry at all. In fact, we've had a heck of correction. That's what we'll do now is get into the charts of the individual automakers. Okay, this first chart that I covered back on January 18th was MG331 on TC2000, as well as freestockcharts.com for those of you using that. And that's from the major auto manufacturers. And you can see here, anytime you click on an image on right side of the chart when you're using a PC, click on it, it'll expand, and then you can pan and zoom in and out to get more detail. So at that point, I said the most recent high in the auto manufacturers index will soon be confirmed that the PPO makes a bearish crossover and rolls over, which you can see on the chart on the right is the updated. This is a live chart here. So that's what happened. We fell down, hit that trend line, broke down through it, back tested, see the trend, and we've moved sharply lower. So we were back here at the time. So the industry as a whole has already dropped, 13. That's well over correction territory, much more than a 10% drop. And you can see I had us dropping here, initially down to that 475 level, and we hit that. You can see to the penny on the initial drop, almost to the penny, give or take. So we fell down there, hit that level, and that's when we bounced and had the back test. So that was the first reaction, and we back tested the trend line from below. Never did a follow-up post on those until now. Hit that level again and finally gave up the ghost. So now here's the bigger picture. Okay, that was then. This is now. We are now below. We've broken both trend line support as well as that first key. That was a key level. That's why it was identified here a couple months ago. And we fought it for a while. The automotive manufacturers, yeah, it's an index of all the major automotive manufacturers. I'll show you a list of them in a second. But we're below trend. So what I'm looking at here is, you know, sooner or later we might get another kickback rally to test the highs of that level. We'll have to see what happens again. Let's see what auto sales, how they come out tomorrow. That would obviously be a nice shorting up if the charts confirm. We have trend indicators clearly in bearish territory, but I do expect over time another thrust down here to this 445 level. I put an additional target, and I think we're going down there. So if we can get there first, this is actually what I'd prefer to see. Like to see a little more downside in the automakers soon, get there and maybe go long. But again, this is just a compilation of various automakers, both US and non-US. And I always treat the charts of each individual automaker, each individual stock, I should say, yes, separately. In fact, you can't short this index. This is just an index. I don't believe there's an ETF out there. There might be one for automakers. I'm not aware of it. Okay, now moving on down that post from January 18th, let's look at the charts that I put up at the time. This is Toyota Motor Company, TM. Let's pull the chart of TM, the current chart, and see what happened. That first chart here was a weekly chart. We'll zoom in a little bit. What I was highlighting at the time were these overbought readings, extreme overbought readings. That's all the other arrows showing you the other previous overboughts, and then the scenario there. That was a weekly chart. Let's see on this board right here. So as you can see, that's played out almost to the penny here, exactly as predicted there. You can see we had topped at this point right here, which was this candle, and since then moved down. And we're just above that target. You see, I had that 122.26 target, and so far we reversed just shy of it. Close enough, but I still think we might get one more thrust down soon, and then that's where I'm looking to recycle in long. Let's look at the daily chart. That was up next. This is the TM daily chart, so we'll flip over on the updated chart. And so at the time, you can see we were extremely overbought. We had this ramp. You can see the sharp blow off type top, I should say. And my prediction was a move down to that 127.24 level, and we did. We hit it. And this is what I call, you guys have probably heard me use this term many times in the past, a momentum fueled overshoot. When you have a lot of downward velocity, sometimes you'll briefly overshoot a support level. Was a pretty well-defined support level, and we did. We only traded under there a day or two, snapped back up, and now I added a resistance line here. So this is resistance. So it looks like the upside in Toyota might be limited at this point. There's a gap up above, and I'll zoom down to the 60-minute chart. I didn't cover that in the previous video. Yeah, in hindsight, I missed this. There were some trading ops when these stocks hit these support levels. I wish I had followed up on these earlier. You can see we had a divergent low. I just jumped down to the 60-minute time frame. If I don't make mention, the time frame is right up here. And you can see nice bullish divergence. Prices making a lower low with the indicators making higher lows. And that was good so far for a rally of about 5% in just very short order. But we're starting to come up to some resistance here. So let's see what happens with TM. And just to make clear what I'd like to see with TM, if, I don't always get what we want, I don't always get what I want, we don't always get what we want in trading. But that would be to see the stock reverse soon. Again, I wouldn't chase it here. That was a 60-minute divergent low. I didn't see divergence on the daily, so I favor another thrust down, and I'd like to step in if the charts confirm at the time, meaning the auto sector, the stock market to some extent, and most importantly, Toyota down here around 122.40. Doing so would probably give us a nice divergent low, setting up the stage for a nice rally, a counter trend rally. That could last well into the double digits and span for weeks, if not months. So that's my preferred scenario right now, and that's what I'm watching on Toyota. The next one covered in that January 18th post was Ford Motor Company. We'll zoom in a little bit here. I had a divergent low here, led to this huge rally, and at this point, Ford had already started moving down before the rest of them. And it just and that then part that prompted me to do the video. Ford had dropped. You can see off this divergent high, sharp correction, dropped 11% in just a couple days. And I said, at least, we'd have some more downside before meaningful bounce is likely. And you can see here we did fall that level, and we did have some reactions there. I thought we'd get more of a bounce in Ford, but what happened is at the time the rest of the automakers are starting to roll over, and so you can see after about a week of trading above that 1186 level, Ford gave up the ghost, broke support, fell down, hit this next target down here. Um, and sold off. Now here it put in a pretty strong divergent low. You can see the bullish divergence down at the bottom here. And again, in hindsight, I wish I would have caught that one at the time. There's a lot of balls I'm juggling up in the air. I'm trying to watch everything, and the automakers had just simply fallen off my radar. But again, we'll look for the next trading up here. Let me see if there's anything on the weekly chart of Ford. Yeah, here's Ford again. This is my weekly chart. You can see back in 2011 we had a divergent high, negative divergence, had a divergent high right here on the RSI that led to this other correction. So each of those previous divergent highs led to corrections here, and of course this one here after this trend line break. But what I'm looking at, what stands out to me in Ford is that it is at support. And this goes one of two ways. You either buy long at support for a bounce, but if that support breaks, the next support level doesn't come in here all the way down there to what that number is at 890. So just we'll call it $9, a little bit below $9. So we'll watch this for a break. And again, this would be pretty bearish if we do break this support level, especially on a weekly closing basis. So Ford right now, I don't see a trade at this point in time, but it may be setting up, especially if we get down there. I think that'd be and the charts confirm, of course, a nice area to go long. Okay, next up on that post was Fiat Chrysler FCAU. At the time, we were right up here, right off the highs. My prediction was a move down, hit the trend line, have a little reaction, bounce down, hit 1845, and then ultimately 1655. Reactions each level. If I stop an arrow, I don't always draw the counter trend bounce, but that's where a reaction's expected. So what has happened since then? Well, we certainly fell from that point. It was pretty timely. We fell down to the trend line. We actually broke below it, kicked back tested for just a hair, and have started to move lower. So we've yet to hit that 1845 target. In fact, this one has held up relatively well compared to most of the other automakers. So we had a divergent high, as pointed out back here, and I think there's more downside in this one. So I wouldn't be interested in going long FCAU until and unless we get here, and again the charts confirm, and if that level goes, then we also have pretty decent support at 1655. And again, I'm talking about swing trading here, hitting it short, recycling back in, going long or covering if the charts confirm, and then ultimately, seeing this one work its way down, especially when auto sales finally break out of that range, if and when, or not if, when the economy is in the next recession. I've talked about this ad nauseum lately, and you can just Google it all over the internet. We are now in one of the longest economic expansions in history, as well as one of the longest, second longest bull market in history. So it's only a matter of time. Recessions, just like economic expansions, are a natural part of the business cycle, just like the seasons, winter, spring, summer, and fall. We're going to have recessions, we're going to have contractions, and we're going to have expansions. That's just part of the game. And we're almost done here. Next one up was GM. Back then, I said an ideal scenario for a swing short. Here, let's zoom in a little bit. Would be for the stock to put in a marginal new high, a divergent high before reversing. However, the PPO and RSI are starting to roll over, so GM might not have enough gas in the tank to do so. It didn't. There's that line. From that point, we were right here, which is right here. And again, most of the automakers were starting to roll over, and as the indicators here were, so that was the case. So GM from that point, just a couple months ago, already fell. It's already in a bear market. It's fallen over 20% since that post. And now what stands out to me is we hit trend. See this trend line? Let me jump back to a longer period chart. This trend line comes off the mid 2015 lows. So there's GM. It's at a trend. It's, yes, in a bear market, but it's at trend line support. And let's zoom down. I don't see a compelling case to go long for a multi-month trade, like a bottoming play. I don't see that on the daily chart, but on the 60 minute I do. We put in a divergent low down here just recently. Again, I wish I would have saw these about a week or so ago because it was already good for about a 5% pop, but it's coming up on resistance. So I wouldn't chase it here at this point. Trend indicators are still in bearish territory, but I'm going to keep an eye on GM. Might need another thrust down, maybe test that trend line again, but there might be a long. We've already had a lot of hot air let out of GM. Okay, after GM, I covered the final one I covered was Honda Motor Corp, HMC. On this chart, you can see here we had this divergent high led by a correction that ended with a divergent low. The old wash, rinse, repeat. There was that divergent low, and that led to this rally here. And at the point, there it is, Honda Motor Corp is setting up for the next swing short following this most recent divergent high. On watch for any signs of a likely trend reversal, including a break below the uptrend line. There's the uptrend line. There's a scenario. There's a break below the uptrend line. Hit that first support level. I added a line since 34.45. We almost hit this 33.64 down here. That was that line. What we did in this one, we had a kickback rally to backtest the trend line from below and then rolled over. So that target was hit. My next target, 32.15, has not yet been hit. I think it will over time. Yeah, I just looked at the weekly chart. I don't see a whole lot that stands out to me. But there's two more I wanted to cover, a couple more in the automotive industry that I didn't before. Tesla was never really one of the big automakers, but it is now, getting up there. Tesla, here's my thoughts on Tesla. I know there's a couple people following trading this one on the site. There's a support level that I have here. Let me find. Here we go. This is what I wanted to. I was looking at, thought I had a different board. I just needed to expand this chart so you can see it a little more clearly. Tesla's coming up. This is a level that I've been watching, 244.35. I'd like to see it get here, and I think there's a bounce trade. You can see reactions back here in early 2016. You can see reactions here. So this is a support level I'm watching. Indicators are still pointing lower, so I can't make a case to step in right now, at least not aggressively long. But on the bright side, one potential development, we are oversold. The last time we were oversold, as I had circled, was right here back in late October, early November. That led to a rally from there of, let's see, up from the highs about 23%. We were oversold right here at this point, and that led to a rally. I can't grab the exact point, or I'll move that trend line. Roughly 30%. So here you had a divergent low. You were oversold, but then you had another dip down towards that oversold reading, but more importantly, a bullish falling wedge. These are the big moves. This is what I look out for trend trades right here. Oversold, positive divergence, bullish falling wedges, things like that. I don't see that. In fact, I saw the opposite. I saw it in reverse here on Tesla. we had a divergent high, a series of negative divergences just as large in scope, and that marked the high in Tesla so far. So the trend right now is clearly bearish, and all I'm looking for is the potential to play a bear market rally or a counter trend bounce, whatever you want to call it, off this support level if the charts confirm at the time, roughly 244.35. And let's talking about the charts confirming. Let's see what I have on the 60-minute chart. Okay, here's what I have on the 60-minute chart. Um, I have a scenario drawn out um, that looks something like this. Put in another low, come down to that, a little bit lower here, somewhere along there, and then reverse. And what that would do is give us a bullish divergence I like to see on the 60-minute time frame. And if that coincides with the support level on the daily time frame, that 244.35, give or take. Now you're talking a $240 stock, so every percentage, every point on that stock is less than a half a percent. So you have to give it some margin of error point wise there. And two others that most people might not be familiar with, TTM, Tata Motors. This is an Indian car maker, and this one looks interesting. In fact, since the video started, I started this video before the market opened, but now we've broken out. So I had a downtrend line here on this daily time frame, potential divergence here, bullish divergence. Again, a lot of my lines disappeared here, but there it is. I'm trying to draw a trend line right there, get the trend line there. So there's a breakout of a bullish falling wedge pattern, and this one could run up here. I could easily see it going up to that 2762 level. Now again, it's the a lot has to do with the auto industry, but this again is an Indian car maker. This is not U.S. Everything else I've covered so far, even I covered Honda and Toyota. Of course, those are Japanese automakers, but a lot of their sales are based in the U.S. as well. So that's the U.S. is just as important market. And then another niche one, BLBD. Bluebird Corporation. They make school buses. So what I'm looking at here is a almost divergence on the RS on the PPO. Made a slightly higher high, but we have negative divergence on the RSI, and there's a daily chart on Bluebird. Looks like it's coming down here to that 2043 level over time, and thought I had the weekly chart drawn up. Okay, there it is for you. I flipped over to weekly chart. I had to annotate it. It hasn't been trading that long since 2014 here, and that's really the range started to expand. But you can see on the weekly we have divergence. The PPO is rolling over, pointing down. So that's BLBD again, Bluebird Corp. And when we look at the daily chart, you can see these are some potential targets. I'd have to firm these up, but ultimately I think it works its way down here, and I see probably another 20, 23% or so downside in that one. Okay, we'll wrap it up here. Economic data to be released soon. In fact, we just had, it's 9:46 now, so we had the first report and then two more coming up at 10 o'clock, and I'll post a market update after that. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.